Okay, guys, welcome to the BigHorn Capital Fund investor call. And today, really excited to share with you guys our Cathedral Group offering. So I know there's a lot of existing investors on this call who've participated in some of our other offerings through BigHorn Capital, but this is going to be our first equity offering. So really excited to do that. I think I've talked to a lot of you guys on different calls, and the cool thing about the way I set up my fund and why I did this is within BigHorn Capital Fund, because of the platform that we run it through, we can have different options, right? And a lot of you guys, I probably explained this when we were first having conversations, is you guys can actually have we can have multiple offerings under the same one. So you guys can pick and choose like where you want to invest. So some of you guys who have done some of our debt deals to date, you guys could also go reallocate. Well, a lot of that money, depending on the deal, right? A lot of the times that capital is in that deal, but if you're brand new coming in, you could put, if you had 100K, for example, you could put 50K in one of our debt deals and 50K in the equity deal. And the cool thing is at the end of the year, you get 1K1 from the same company, makes your tax returns a little bit easier, and ultimately want to give you guys flexibility. So really excited I want to tee that up to present this one today with our Cathedral Group offering. So if you guys have never, I should have a good picture here of the mountains here, but the Cathedral Group, if you guys know the background of the Cathedral Group, that is actually the group of mountains where the Grand Tetons are at inside Jackson. So, and a lot of you guys have maybe been to Jackson Hole or heard of it. One of the most famous mountain ranges in Wyoming, really across the country. But the range of, or the group of the mountains that make up the Tetons are the Cathedral Group. So that's why if you guys have seen a lot of our companies is based out of Wyoming. It's where I grew up, and that's where a lot of these different names have came from. So keeping with the theme, going with the Cathedral Group offering on this one. So our first true equity offering. I'm excited. So why the equity offering, guys? It's the biggest thing. And I think when I've been communicating on social media and emails and talking to our investor base this week, the biggest thing for this one, well, there's a lot of benefits, but what I think kind of makes it timely is because the way we're setting this up and it's equity, you guys can get the same depreciation that I get, right? Again, I'm going to give the caveat. I know Eric's a CPA. Talk to your CPA about how your income is treated, right? Because there's a difference between passive and active income and losses. Okay, so talk to your CPA on that, right? Everybody's treated a little bit differently, but at a minimum, the income that's produced from this fund will have enough depreciation or write-offs. And what we're going to do is, for example, the people that are able to actually take those write-offs, hold on a second. I'm going to stop my notifications here. Okay, so for the people that can take the write-offs, you can actually, what we're going to do is we're going to do a cost segregation, and you don't have to do the cost segregation by the end of the year. You just have to purchase the properties by the end of the year, right? But we can go in 2025, we can go get a cost segregation done across all these assets, and that allows us to go do bonus depreciation, which is ultimately going to help a lot of people. It's going to help a lot of people offset the income they made in 2024. So that's kind of the biggest part of the timeliness of this. But even if you don't need the tax write-offs, there's going to be a lot of other benefits because it is an equity deal, right? You're going to get some of the long-term upside that I get on all of my other deals. Okay. And that's kind of what I captured here, right? So in 2024, the big benefit is we get these depreciations, right? And these paper losses. The second thing is in 2025, we're going to be able to get the cash flow from the properties because I'm bringing in assets that are already performing and cash flowing. And the second thing is just the long-term wealth building of real estate. That's the whole reason I've been doing this for now 15 years ago when I bought my first property. That asset in Laramie, Wyoming is now worth a lot more today because I continue to hold it. So that is the plan with this fund is we're going to be buying and holding these assets and letting real estate do what real estate does really well, right? It continues to appreciate. And as long as you buy in the right areas that are growing, even in areas that don't okay, I'll tell you guys this, there's some parts of Wyoming that historically, it's not like Denver, Colorado or Salt Lake or even what we've seen in Houston. You don't see this huge growth, but at the same time, you don't see this huge, you don't see these huge drops, right? It's funny, I was just talking to a seller today in Lincoln, Nebraska. And she was like, I swore I was talking to somebody in Laramie, Wyoming, because she's like, it's really weird in our market. Like in 2008, we didn't even have a drop. Like the whole country was melting down in the real estate industry, but we just flatlined. And then after a year or two, we started going back up steady again. So that's a lot of these markets in Wyoming. They're just slow and steady. We have gotten actually a lot of appreciation in the last couple of years, but you don't see these crazy swings and these crazy spikes like Colorado or California. But then, like I said, then you're also insulated a little bit when it comes to the downturns. Like it's a little bit more insulated, which is nice.
Hey, Casey.
Especially when you're, go ahead.
Sorry, real quick. Let's see if you could play the slideshow to make it a little bit larger for us, if possible.
Yeah.
And then, do you mind making sure we're all muted? There's two reasons to do that.
Yeah, you bet. That's what I've been trying to figure out how to do this. There we go. All right, cool. There we go. I think I got it figured out.
Super
Okay,
helpful.
and then I'll just let me know, Clint, if it here we go. Is that make it a little bigger now?
I appreciate it. I'm not sure everyone else's preference, but that'd be great. Thanks.
Yeah, thank you. All right, appreciate it, Clint. Clint's my right-hand man. If you guys haven't met Clint, he's my COO. Helps us. He's helped me out. He's helped out tremendously, and he's, as you guys will see when we talk a little bit about our company, kind of some of his role. All right, appreciate that, Clint. All right, so yeah, most of you guys probably know me by now, but I'm not going to spend too much time here because I think most of you guys know who I am at this point. But I am going to talk a little bit about like kind of our company integration and why, like ultimately what makes us unique. So I'm going to actually go there right now. Okay. Here's a quick disclaimer. I'm not going to read through this, but as you guys know, this is an investment offering. It is for accredited investors. I do want to make sure I highlight that. This is for accredited investors. Okay. So we'll kind of talk about the fund, right? And really why I started this fund, guys, is in why I've been focusing on Wyoming so I grew up in Wyoming. A lot of you guys know that. I've invested there. I bought my first property 15 years ago, but in states like Wyoming, and I did my undergrad in Montana, and now we've recently added South Dakota. All this area I've always really liked for what I told you about earlier, as far as like it's steady appreciation. I don't see the big swings, right? So it's a kind of a slow, steady appreciation. But the other thing is like taxes and insurance. Those are some other huge benefits. Like, again, I'll share this story because it just is relevant today. Again, I'm talking to I got my whiteboard. My whiteboard's usually behind me, but we were looking at this house in Houston, and they only owe like $350,000, and the guy's monthly payment is like $3,800. And I'm like, holy cow! Like that same deal in Wyoming for like a $350,000 loan, the taxes, insurance, principal, and insurance or interest, all that, the PITI we call it, all in Wyoming is probably $2,000 a month, right? And that allows us to buy more cash flowing real estate, right? But versus that deal in Houston is $3,800. That is, you're hard pressed to go find somebody who's going to rent that house for $3,800. So that's a big reason why I've been investing in Wyoming, and I continue to invest a lot of our resources, which you guys are going to see in that market. The other part is kind of talking single family and multifamily, right? You guys are going to see in this offering, there's a little mix of both. I've always liked single family just because they're a lot more liquid. You can obviously do a lot more fix and flips with the single family, and there's a lot of perks too when it comes to renting them out, because I've always found in our portfolios, there's always a lot of demand for tenants who want a house, right? They don't want an apartment, right? But on the flip side, we've also done some big multifamily projects where when you start to do the economies of scale, and I'm going to show you guys 2 case studies here in a little bit, when you start to do this multifamily and get the economies of scale of your contractors, your property management, even just the sheer work that goes into acquiring it, there's a ton of savings. So that's been kind of a big shift into our fund to do both single and multifamily. The other piece is, and why I really started this fund was, as you guys know, those of you guys who know a lot about me, is again, I've been over the years, I learned how to find off-market deals, right? And then I started to really recruit and bring in-house construction. And then I did property management. So I could get really good at finding the deal, fixing it up, and then renting it out. But to do all that whole process, it's very capital intensive, right? You got to have ultimately it becomes a capital game. So that's why a couple of years ago, I had the energy, you know what? I can keep raising money from my friends and family and guys I work with on like kind of one-off deals, or I could really scale this through our fund. And that's why all of us are here today, honestly, is because now through BigHorn Capital Fund, we can take down more deals and bigger deals, honestly, together. As you guys have seen a little bit in BigHorn Capital Fund, a lot of you guys, I mentioned the deals we've done earlier, and I'll show the couple examples, but we've got debt offerings and now we got equity. And the beauty of BigHorn Capital is it can do both, which I kind of talked to at the very beginning. And last thing is vertically integrated. And I'm going to break this down for you guys. This is, I think, the biggest difference between us and most other, I think, fund manager and other funds you guys could probably look at is I don't know too many funds out there that where they find the deal, they do the construction in-house, they do the property management, they're actually the ones raising the money, right? Like there's a lot of funds where you're just talking to the guy who's finding an operator like me to go do all three of those things, right? So we try to do it all in-house, and that's been just a huge game changer for us, which is what I was talking about here. And I want to actually kind of break that down real quick for you. But before I go there, I wanted to mention underwriting. So where this kind of comes from, guys, is my background. I mean, I'm a math guy, undergrad in math. I know, for example, I'm sure Eric can relate to this, and both Erics. I know Eric's a finance guy, and Eric Wegeman's a CPA, right? And I worked with a bunch of engineers at Shell. I'm an engineer by degree, right? So I've always just found it really helpful for our limited partners to show them the underwriting. And I just find in most other funds or most other investment options, you don't always know exactly what you're investing in, and or maybe they show you the numbers, but it's like a one pager, and there's really not clarity on like what are the risks, what are the assumptions, right? So part of what I'll do today, and then I've got more resources I'm going to share with you guys to dive deeper for those of you who are analytical and want to actually understand it. I think this is a big difference in our fund is I take the time to show you the underwriting because maybe it's just because I'm an Excel nerd and I like talking in Excel and showing people. But at the end of the day, I wouldn't invest in something that I didn't understand. So I want to take the time for you guys to understand that. So hopefully that's a good resource for you. And I encourage anybody, if they got questions on how the numbers work, please do reach out. And the last piece is our market, right? I talked about some of the other benefits of Wyoming and Montana and these markets that we're in. The other piece, though, is just kind of us being able to get a little bit insulated. And we are the biggest player in Wyoming right now, the biggest buyer. And we've got all three different parts of the company. So it's really allowing us to be much more competitive than any other kind of small mom and pop. And you'll see that we're doing things that no one else is doing up there. And those of you guys who've been to Wyoming, you guys know what I'm talking about. It's just it's a lot slower way of life. And I'm sure there's going to be a lot of people in this fund that grew up and know and love Wyoming, and they get it, right? They understand that we joke around about it, but Wyoming's like 20 years behind the rest of the company, or sorry, the rest of the world or the rest of the country, right? When it comes to technology and just a way of life, right? And that's why so many people love it. But I think it's a huge advantage for us because I live in Houston. I'm part of masterminds and other groups that are doing things like cutting edge in terms of AI, technology, marketing, right? And when we go apply that in a market like Wyoming, it's like the Wild West, the first frontier. Okay. So I want to talk about kind of the three phases really quick. And the reason I'm taking a little bit of time to explain this is so you guys understand like what's different about us and kind of how we mitigate risk and how we're putting this fund and this deal together. Because you guys ultimately are reaping the benefits of all three of these things I'm going to show you. Okay. First one is like how our pipeline, how do we come up with these deals, right? So historically, Wyo Houses, that's my little logo there. That's the direct to seller company. Our goal has been for a couple of years now, and I feel like we're probably there. We're just working on quantifying it, but we want to be Wyoming's #1 home buyer, to where anybody across the state of Wyoming, if they think about selling, we want them to think, you know what, I'm going to go to their website or I'm going to call those guys first and at least see if I can get an offer from them that I like. And by doing that, that allows me I get first looked at all these deals, right? And then I can present these options to our fund or potentially add these opportunities to the fund, right? And now, because the other thing you guys see, I do a ton of stuff on social media. You probably see me talking about problems to profits or like weekly Zooms I do. Well, the reason why I started investing time into this is, guys, this is like blowing up my deal flow because now I have these students that are just trying to learn, right? But they're hustling. They're doing all the marketing. They're talking to sellers and agents, and they're basically just bringing me deals that they're not quite sure how to close because they're brand new, right? And even if they knew how to close it, they're not quite sure how to sell it or what are they going to do with it, right? How are they going to find a buyer? So these people are bringing it to me to not only help close, but then a lot of times I'm going to be the buyer. So this is what's actually opened it up across the country for us to look at countrywide deals. But this fund is going to be designed to do stuff in our core market in Wyoming, Montana, South Dakota, those areas where we've got the strongest foothold, we've got the most boots on the ground. And I feel like it's definitely our strongest part, but I also wanted to kind of show you guys where we're heading. All right. One of the other biggest pieces, and honestly, this photo I'm probably most proud of, is our Revive construction team. This was something I started working on several years ago. And I still can hardly believe that we finally, I mean, we're in this picture, myself and five other guys, five other team leads that are leading crews in Wyoming. Guys, this is unheard of. There are some guys, obviously, that do new construction, general contractors across Wyoming, but there's no one that's doing it statewide, and no one that gets the synergies and like the scaling that we're able to do statewide. And it's because of this team that we've been able to put together. And yeah, it's been a complete game changer, because those of you guys who've also heard me, you've probably seen videos on that I've talked about this before. The biggest risk, I think, undoubtedly in real estate is piece. When you're doing value add, or you're doing construction, or you're doing fix and flip, the biggest risk is the contractors. They're a wild card, right? Any of you guys who have got work done on your house can relate to that. It can be the Wild West when it comes to contractors. And the way we've mitigated that is bringing them in-house. And because now I have so much scale and we're doing so many deals, now I can keep all these guys busy. And probably the best part is, well, there's many good parts. We have obviously the savings on that, but what I love is the control. So now if I'm doing a fix and flip, I don't have to worry about that GC that's got 5 other jobs. And is he going to prioritize mine? Am I going to get it done on my timeline? And then another piece, which it kind of segues into property management, is these guys. I'll go to this next slide. So because we manage all of our property in-house, now, like, there's 2 cool things, right? So now whenever I have maintenance or stuff that I need to get done, I've got crews and guys that are available, guys I can trust, right? Because that's half the battle. The second thing is, though, when we're like, me and my COO were talking about this, is when we did this on our big multifamily, as we started to fix up our multifamilies and we bring properties online, we're able to, like, at the same time that we're fixing units, we're actually handing it back to property management. They're backfilling units. So literally, as we bring stuff online, it's cash flow is being increased. We're all working together because of all this synergy, right? When you're working with a third party property management company, I can assure you it's not that smooth. And that's why I brought up this slide. Is I'm in a lot of, again, I've told you guys, I'm in a lot of masterminds and other communities, and almost the majority of these people who run funds or run these syndications, like they third party the property management. And if I could tell you the horror stories and the frustrations they have dealing with third-party management, they're plentiful, right? And anybody who owns rental properties probably can deal with, right? There are some good ones out there, but it's just always hard to align. You can never perfectly align with your property manager, right? And that's why we brought it in-house, and it makes a big difference. They're constantly pushing rents. We always get rents that are much higher than the rest of the market because we work a little bit harder in marketing, right? Your typical property manager is going to go list that thing like maybe even a little bit below market, because if they list it below market, they get 50 applications and they don't have to work that hard, and they can go fill it with the first one that passes their criteria, and then they fill it, right? Versus us, we're like, hey, let's go figure out what is the market right now. Is there an opportunity to increase it? And that's one of my favorite parts about our in-house property management. All right, moving right along here. I talked about Clint earlier, but I wanted to kind of share our company structure. Myself as a COO or CEO and visionary. You guys met Clint on this call. He is our COO, and he is our lead project manager. He leads all of the construction guys. They all report to him. And then Dallin Cottle, who's not on this call today, but he's our chief marketing officer. A couple more people as we kind of work down. These are our needle movers. Judith Allen, she helps me out with acquisitions. Alyssa, a lot of you guys know Alyssa Stutzman. She is my investor relations point person, and she also helps with Dispo. You saw Joe and Edward. Those are a couple of guys that I showed you. Those are some of our team leads, okay? So again, I'm going to go quickly through here, but I just wanted to give you guys a feel for, if you want to come back to these slides, like this is how my company's built out and the different people in the different spots, right? I don't think I need to go too deep there, but I know some people appreciate knowing kind of how the company's structured and who sits in what seats, right? I could tell you 5 years ago, this was me sitting in the majority of these seats, right? But I've been fortunate to bring on Clint and bring in all these other people who could sit in those seats and allow me to continue to grow the company and find new opportunities and be able to do investor calls with you guys and work with you. Our core values are humility, ownership, and perseverance. This is all I'm going to say here, guys, is like we develop these because this is how we hire people. And this is literally what we fire off. I learned this from a lot of my mentors, that if it's not a core value unless you would fire somebody for it. So these unfortunately or fortunately, we've had to fire people in our company over these things. So just wanted to share that so you guys know a little bit more about us. All right, now let's kind of get in. So that's a little bit high level about us. Now I want to talk to you guys about a little bit of our track record. So I think a lot of you guys have probably seen this spreadsheet. And if you haven't yet, this is something I built out kind of like on the macro level, right? Think about all the deals we've done. I started tracking this a couple years ago. I wanted to be able to, and you know what? It also goes back to the transparency. When I talked about underwriting, I also wanted to have more transparency on the deals we've done. So this is a link I'll give you guys access to. And I'll say that right now. At the end of this call, and if you're watching this recording, you will get an email with like all these resources. You're going to get the slides. You're going to get a copy of the recording. And there's a lot of other supplemental things I want to give to you guys. This is going to be one of them, right? It's a link to this track record. So there's like over 100 deals in here of deal. And you can see it. You can't click them here, but literally there's like hyperlinks to where you can go see the settlement statements from the title company, the photos, what we bought it for, what we sold it for. If you can't see it here, but if you scroll over to the right here, you guys can see like how much did the investor invest? How long did he invest the money? What was his return? Right? I've taken the time over the years to build this all out. And it's really for you guys. So you can see that, hey, here's a bunch of different opportunities. And it also just shows you the type of properties we buy. So kind of now let's kind of zoom in a little bit. So this is going to have more apply to what we're talking about today in this fund, which I know you guys are excited for me to get there, is I actually did this with another partner and we structured it as equity. And that's why I'm bringing it up, because I think it's the most similar case study we have to what you guys are doing. And ultimately, this investor, this partner and I, we brought in some of these existing properties. So this is just a screenshot of some of the rents and some of the addresses and what we're doing. Like some of these are short-term rentals. Some of these are just regular long-term rentals. Typically the difference is we furnish the short terms. And then it talks a little bit about the bedroom bath count. But ultimately I'm showing this because what I did with this partner is we brought in some existing assets and then we brought it into this partnership, just like I'm doing on this fund, and they were cash flowing. That investor brought in some of the capital to where now he's getting a good return. He also gets depreciation, all the things we're talking about here. And the other cool thing this partner did is he invested in this. So we did a group of single family properties and multi, kind of like I'm showing here. But the other thing we did is we brought in a multifamily, right? This is one of the first really big multifamilies we did, just to show you guys kind of high level. And this is backing up a little bit. At the beginning of the call, I talked to you guys about how we find the deal, fix it up, and then we rent it out, right? But by doing this, we create a ton of equity and a ton of value because we find it at a discount, we fix it up, and then we put a tenant in there. So perfect case study. We bought this thing for $3.2 million. We put about $825,000 in. So that's across like 55 units. So average cost was $15,000, right? So our ARV on this one is right around 5.6 million. So literally we created by doing, so now this is like doing the fix and flip at scale, right? I could have done 55 flips, would have taken me a long time and a lot of stress and a lot of energy. Instead, we did it across one asset because we found an asset that needed work and we did all the work to it. We fixed these up. Now this is the probably most proud thing is now this thing is 100% occupied, or not 100%, but we're like over 90% occupied. And we're actually doing some short-term rentals in it to even boost the rental. So there's about, let's see on this one, I think we have about 9 units out of, there's actually 66 units now total. I'm probably going fast. This building has 72 units. There's actually an HOA. So we own now 66 of them, right? So of those, 9 of them are short-term rentals and they're doing really well. And then the rest of them are long-terms, but we've been able to fix this one up, get it rented out. And now it's one of our best assets. So I wanted to share this because I did this in a similar partnership that I'm setting up in this fund where we brought in existing assets and we brought in a big value add like this one. And it's really paid off. The other one is, and I won't go too deep on this because a lot of you guys have probably seen this one and some of you guys might actually be investing in it, is our Lilac Way one. This is where we invested $1.7 million from BigHorn Capital Fund. And we're actually rehabbing this one. This one's going really well. We're actually, getting down to our last, we got several more units that we're renovating, but this is another good example of as soon as we get these things rented, as soon as I get them rehabbed, we're literally filling them like right away, even in the wintertime in Wyoming. And typically it's tougher in Wyoming in the winter. But these units are filling up. There's a ton of demand in this market, not enough housing. So this one's going really well, and we're really excited. All right. So if you guys want more resources, I've probably gone, for some of you guys, I've probably gone way too deep, but other people might be like, hey, I want to know just more about what BigHorn Capital Fund does. How we, like I highlighted a couple things here, right? Like how do we do our underwriting? What's our due diligence process looks like? How do we mitigate risk? And how do we actually define the risk? And then, yeah, what do we do to mitigate them, right? I also talk in this, and this is actually, I'm going to share a link to this video. It's about 60 minutes. But the other thing I talk about is, so some of you guys that have already invested in real estate, you guys have seen the power of it, right? You guys see the appreciation, the mortgage pay down, the tax benefits, the cash flow, all these things, right? But some of you guys might be brand new to investing in real estate. And what I do in this same video is I talk about some of those advantages. I explain how real estate fits in with your other investing, right? If some of you guys invest in stocks and bonds, you might be wondering like, where does real estate fit in? And it's kind of cool. I share a cool slide in there about how like the ultra wealthy invest and how real estate is it's a piece of the bigger puzzle of how they invest their money. So anyway, this is just a resource that you guys can go check out. And again, it'll be in the email that I share with you after the meeting. Okay, so let's talk about exit strategy, right? So on this fund, and I'm about to break down the fund and show you guys numbers, but I'm going to kind of start with the end first. Like, what are we going to do? Okay, let me back up a little bit. So the plan for this fund, it's planned to be a 5-year hold, right? Do we have to hold it for 5 years? No. If there's an opportunity to sell it all off before then, will we look at that? Absolutely. But the plan is to hold it, get the depreciation, get the cash flow, let the properties continue to appreciate, and then sell them. But I wanted to kind of walk through what that could look like. So that could be just individually selling them off, right? And that's kind of the first option I've talked about, to whether that's to my buyer's list or whether that's just putting it on the MLS, right? The other one is we could just have an option to just refinance it. And then if people want to stay in and want to keep it going, they can. Or if there's people who want to take their capital and take their return and go invest it elsewhere, then they can do that, right? And the third favorite one is really grouping this stuff up. And I've talked to a lot of really high level investors here in Houston about, and he's always giving me this feedback. He's like, Casey, you need to bundle up as much as you can. And then eventually all the institutional Wall Street money is going to want to, I mean, you're already seeing it. There's already so many hedge funds going out and buying single family and multifamily properties, right? And bundle that all up and sell it. Because I don't know, we joke about this with Wyoming, these numbers that I'm getting and these crazy cash flows and all the benefits of Wyoming, nobody knows about it just yet, or some people do, but not that many people do. And eventually more people are going to realize that, hey, we can't get a good return in the Denver, Northern Colorado area. We can't get good returns in Salt Lake. You're already seeing it in Montana, where like Montana's becoming overpriced, but eventually it's all going to spill over into Wyoming. So that could turn in just a big exit to where we go sell to another fund, or a much larger fund that they just want to get the passive income from it.